Hello, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Wednesday, April the 30th, 2008. Headlines out of Switzerland this morning said dollar rose ahead of FOMC and expectations for a pause in U.S. interest rate cutting. The dollar rose to an almost one-month high versus the euro on Tuesday, buoyed by growing views that the Federal Reserve is ready to signal a pause in its interest rate cutting campaign and by weak European economic data. Analysts expect the FOMC to cut the benchmark lending rate by 25 basis points to 2% and also indicate a pause for now after an aggressive exercise that has cut rates by 300 basis points since mid-September. The euro dollar retraced to 155.76 after having touched a 155.41 intraday low. The dollar yen also retraced to 103.92 after posting 103.22 low. The dollar Swissy rose to 103.64 and the pound dollar dropped to 196.79 but has since retraced back to 197.59. The euro yen dropped to a session low of 161.11 but has since retraced back to 162.52 range. The euro pound also hit a 4-week low against the pound at 78.30 but later rallied to 79.17. Well, markets are expecting a slightly hawkish tone in the FOMC statement accompanying the rate decision. Poor economic data from the Eurozone raised doubts on the ECB's ability to maintain its tough stance on inflation and interest rates. Data on Tuesday showed French consumer confidence fell to its lowest level since 1987, and German inflation in April undershot forecast, with annual rates slowing sharply, piling pressure on the euro. The sterling was hurt by a warning from policymaker David Blanchflower that Britain faced a real risk of recession unless the Bank of England took aggressive action. Analysts said the euro's slide could be arrested if the Eurozone inflation data due today does not show a moderation as widely expected by the market. Expectations for a Fed pause were a bit overstated, which could hurt the dollar. Data on Tuesday showed the U.S. consumer confidence plunged to a 5-year low in April. The gross domestic product data today may show the economy shrank in the first quarter, and Friday's jobs report is expected to show payrolls fell 80,000 in April. The euro dollar was stuck in a tight range in the Asian session as traders await the FOMC. The dollar yen rallied on weak Japanese data to 104.21, but pulled back to 103.75 in late-day trading. U.S. stocks closed mixed once again on Tuesday ahead of the first quarter GDP data and the Federal Reserve rate decision. The Nasdaq managed small gains, while the Dow Jones and S&P 500 closed slightly lower. 4 of the 10 sectors posted gains, while 6 others sold off, led by energy and materials, both of which saw profit-taking as the dollar gained ground. On another busy day of results, the headliners were Visa and MasterCard, both strongly up. Merck was the main negative headline of the day, as the company reported that a cholesterol drug was unexpectedly denied approval by the FDA. The economic news for the day was poor, as the housing market remains in a rut with further spurts of negative housing data. The Nike declined a little, and the HSI lost some grounds during the last trading hours, mostly because of financials. It appears that Citigroup's announcement panned out over the Asian markets, dragging their shares down. European futures were trading slightly above fair value this morning, despite the fact that the SAP missed the analyst expectations for 2007. The Fed funds futures shifted slightly, with up to 80% of the market predicting a 25 basis point cut, with now only 20% looking for a hold. In addition, the Fed funds futures suggest that most market participants expect the Fed to end their easing cycle. While we are in the 25 basis point to 2% camp today, we also believe that the market has become too complacent regarding the risk to the U.S. economy and further financial market problems. In the U.S., the housing market continues to deteriorate, while the economic data, specifically the consumer confidence, remains very soft. Yesterday, the conference board slipped to 62.3. This could directly affect the mortgage credit problem, which seems to be accelerating in recent weeks. With an 8-week pause instead of the normal 6 weeks separating the meetings, it is possible that the accompanying statement could be misleading, since 8 weeks is almost the same as a state furlough. Yesterday, the FT, in analyzing the Fed's mindset, suggested that members don't see tail risk falling significantly, and the markets are still fragile and vulnerable to bad news. This is very true, since in the 8 weeks to come, there will be lots of U.S. data which is expected to disappoint the market and the Fed. Whatever the Fed does and says today, we expect additional cuts in 2008 as economic data continues to point towards negative appraisals. Just hours before the FOMC announcement, estimates for the first quarter GDP will be released. There is a risk of a sharp rebound due to contributions from inventories. However, slower consumer spending, weak consumer confidence, and declining job figures have us leaning to a weak side. As an intraday play, the GDP figures could be the real market mover. Should the figures surprise us and point to the upside, we should see a strong U.S. dollar rally before the Fed meeting. In his first meeting as BOJ's chairman, Shirakawa kept rates on hold at 50%, as was widely expected. The central bank also noted that Japan's economic growth is slowing mainly due to the effects of high energy and material prices. This is cutting its growth forecast amid concerns of a recession. To make matters worse, Japan's industrial production fell to a minus 3.1% versus a 0.8% expected, which was the fastest decline in 5 years. As we have stated in previous reports, analysts are very bearish on the Japanese economy and the yen. That concludes our news broadcast for today and for the month. We hope you are finding this beneficial to your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. You'll also find a link to our Yahoo forum, which is also called Succeed in Forex. We hope you'll visit us there soon. We hope you have a great trading day, and you'll be able to join us for our next broadcast. So until then, happy pipping.